Welcome back to the Manifest Your Success podcast, where we break down what it means to be successful, share the accomplishments, failures, and perspectives of individuals on entrepreneurship, business, and self-improvement.
In this episode, we are joined by TJ. TJ is a full-time futures and equities trader and co-founder of a popular stock market community. He posts stock and market analyses on Twitter, Reddit, and YouTube. Welcome to the show, TJ.
Hey, what's up, guys? Thanks for having me.
Yeah, it's good to have you on. Actually, Sam kind of discovered your Discord back in COVID, and he talked a lot about it and how helpful you guys were. So we're glad to finally have you on. So I'm curious, I know I think you've been trading for about 6 years now. So how did you kind of get into trading, and what motivated you to it? Was it like your someone in your family that kind of showed you to it, or did you just stumble upon it online?
Yeah, so actually when I was like 16, I'm 22 now. So yeah, 6 years ago when I was 16, my buddy, his name is Jesse. He was looking at options, and he was showing me Robinhood, and he was talking about how much money he was making. I forget what he was playing. I think it was some stupid company. He was like, and he was like you know what a bear is, right?
Yeah.
So he was a perma bear. He was one of those guys. Back in 2016, we were like 16. He was like 17, he's like a year older than me. Yeah, this guy was like convinced 100% the market was gonna fucking crash. Like everything was gonna go to zero. So he was trying to convince me basically to buy all these SPY puts and stuff. And I was like, oh, okay. I mean, you really seem like you know what you're doing. So anyway, I bought a bunch of puts and I lost like $1,000, which was like my savings back then. So that was my little introduction to the stock market. And I mean, it's it's very addicting. So once you get into a situation like that, especially if you have a competitive mindset, you're like, fuck, I gotta make that money back. I gotta do, whatever I gotta do to get out of this hole that I'm in. And that kind of is what got me started on the path. And obviously that was not a great mentality to have. And that's why I spent maybe, I don't know, my first 1 to 3 years just losing money for the most part, sometimes breaking even, but mostly just getting my ass kicked because I had this bearish bias that I just couldn't shake because that was ingrained in me when I first started. And then he was like, yeah, the yield curve is inverting, and and it's funny because in 2018 we actually did get it right for once, after being perma short since 2016. But of course in 2018 I did not nearly have as big of a position as I did in 2016, and that's just the way it goes. But yeah, that was my introduction to the stock market, and ever since I've just been hooked. I mean, it's addicting.
Yeah, I think especially back in COVID, that was the story that you saw a lot, was everyone became a perma bear because they were so angry that they missed that initial just massive drop, and they were like, okay, it's just all in their mind. It was like, oh, I was wrong about this, so it has to happen again because I need it to. So you kind of saw that over and over again.
Exactly, and that's what I'm coming to realize, that it's just a cycle. If people just go from perma bear to perma bull back to perma bear, and you just don't want to be on the wrong end of that. That's the general gist of it.
Yeah, I'm curious, so obviously you've probably changed your perception of the stock market a lot since then. So I'm curious, for someone that does think that the stock market is this bull or this perma bear, and you're gonna lose money no matter what. So what would you say to someone that's hesitant to invest and they think that the market, you're just going to lose money all the time? What would you say to someone to kind of change their perspective and be like, okay, you can actually make money safely in the stock market?
I mean, this is what I always tell people who are, I run into a lot of people who are I don't know if it's a good time to get in now. I'm kind of waiting to buy a bunch for my long-term portfolio or whatever. And I'm always like, dude, if you look back to fucking how long the stock market's been around, probably 100, maybe 150 years, and all it's ever done is go up. And that's pretty much all I feel like I need to say. Are you gonna be the guy that finally guesses when the stock market is going to stop going up after 150 years? Probably not. I probably am not. So that's the way I always look at it. If you just want to safely invest, just buy ETFs, and sure that it's likely that one day that does not work anymore, but who knows when that's going to be. 50 years from now, 100 years from now, all you can do is play to the probabilities at the end of the day, and that's what it's all about.
Yeah, I think that's the best case study of all time. 150 years and the stock market's going up. That's pretty sure thing. I'm curious, so obviously you can lose a lot more money trading than you can just buying and holding. over a long period of time. So when you first got to it, you already touched on it kind of that you were trading a little bit, but what was like the balance between like you investing long term when you first got into the stock market and then that balance of you trying to trade money and hit these 10 baggers for some cash?
I mean, like, if I'm being honest with you, I didn't start investing until like maybe mm, like 2019. My first 3 years were just me chasing like weekly options. And I used to always I remember I used to think that like, cheaper options were better. So I'd always buy short dates and I didn't really understand what data was. But yeah, I mean, I I didn't start long-term investing until like 2019. And ever since then, I've kind of kept this balance of like I try to have my long-term portfolio should always be equal to my trading portfolio in terms of value. And if my trading portfolio goes up over my long-term portfolio's value, sorry, this might be a little tricky. I will take money from there and deposit it to my long-term to even it out. But if my trading portfolio goes down, I will never withdraw from my long-term to even out my trading portfolio. So basically, I'm in that way, if my long-term portfolio is falling behind, I'm constantly averaging down with profits from my trading portfolio. But if I'm doing bad trading, then I don't really touch it. I just let it. And if I'm doing bad in both, then I mean, I'm just, collecting dividends, like hoping it goes back up eventually and trying to get my shit together in terms of trading. But that's kind of the balance I keep. I try to keep the values equal. And I think a lot of people should take that because it also like it kind of takes a lot of the heat off you psychologically because when you have this trading portfolio that you're so like dialed in on and like let's say and this also keeps you from being a perma bear because if you're long on the stock market and you have a long-term portfolio equal to your trading portfolio and the market's going up and you're short, like you're not going to be that upset if you're short your trading portfolio because you're making a lot of money in your long term. And like, that's why I think it just always helps to have something in the market at all times. So that's why I keep that balance. And so far it's worked really well for me. And I haven't had that experience anymore where I've been like, I gotta go short. Like I can't miss this great crash that's gonna happen. And that also just comes with experience. But yeah.
Yeah, I think that's one of the things that I've always kind of admired about you is you've always handled risk management really well. And that's kind of one of the things that you always kind of stressed on other people in the group. And I feel like that also, I mean, we'll get into risk management more later in the podcast, but a lot of times when you see someone who gets into trading, not investing, but trading specifically, they'll, like you said, they'll kind of they won't manage the risk well. And then next thing you know, like less than a year later, they're in a big hole and they don't stick with it or they don't like adjust their strategy and they never get out of that hole and they just quit. So I guess what kind of like advice maybe do you have for someone who, or maybe why does that happen that people always kind of dig themselves into a hole and then they quit trading? Like, how do you get around that?
So like, here's the thing, and like this is a good life lesson too. And this is true for trading, and this is also true for anything, like starting a business or becoming famous or something like that, being like so like I always think about like this. Once you see the view at the top, you never forget what it looks like. And like and that's really what it is. Like once you touch that, like once you hit that 10 bagger, that 20 bagger, like once you take your portfolio 1,000 to 10,000, and then you get back down, you never forget what that felt like when you made it go up. It's like a high. It's really is like a high. And I think that's why people get in these holes and that's why they're so fucked up. And that's why they're blowing their accounts is because it's really like a drug. I mean, gambling is an addiction. It straight up is, and there's a lot of people who have gambling addictions and go down like this hole and like I think it's like a very high suicide rate gambling addictions. And like I don't really want to get like too dark, but I'm just saying like once you see the view at the top, you do not forget what it looks like. And that happened to me too. Like I I made a bunch of money shorting uh during the fucking COVID crash. And like I lost most of it, but that shit hurt, man. Like I remember like just sitting in my bed, like wanting to puke, like literally wanted to vomit because of how much money I lost. And it wasn't even that I lost like a bunch of my money. It was I lost so much of my profits that I made. And like if I didn't do that, I'd probably be so much further along than I am now. And like and it is what it is at the end of the day. And eventually you get over it. You know, everything heals with time. And like the key there is really just to keep moving forward. And some people are able to do that and some people aren't. And I think that's another big takeaway is some people just are not cut out for this. Most people are not cut out for this. And like I don't want to sound like arrogant when I say that, like, hey, like I'm special, like that's why I'm able to do this. And no, it's not true at all. Maybe it's just because I'm stupid enough to continue hitting my head on the wall until it's something stuck. But you know, like there's a certain mental barrier that everyone has to overcome to, you know, become profitable and get good enough to this at this to where it doesn't hurt anymore. Um, and if you can't do that, you can't, and if you can, you can. And like, I guess, you know, I'm just trying to think like, there's no, you know, there's no easy way, and there's no shortcut that I can just tell you guys to get around that. It's really just consistency and remembering that like every time that I've almost quit trading was literally moments before I started making a lot of money again. Pretty much every single time. And that's really stuck with me. And ever since then, I've come to like, you know, when I'm feeling really down bad, like I'm like, damn, like it's probably a good sign of what's to come. But yeah.
Yeah, that's quite insightful. I think for life in general too. So like I thought of like emotion when you were kind of explaining that state you were in, and I'm curious like how has it changed like how you deal with emotion through trading like in that time for the COVID crash, and then how you deal with trading now, and how important is it to kind of like keep emotion out of trading if that is the case?
Yeah, I mean, like that is definitely the case. You have to keep emotion entirely out of trading. And you know, it's just it's really interesting. I would really recommend this book called Trading in the Zone. And like it sounds like a cringy book, and like I thought it was for a very long time until I actually picked it up and read it. And I was like, wow, this is really good stuff. And basically a big thing the book talks about is like getting over or removing emotion from trading is a lot about like exposure to situations that you're uncomfortable with, right? So like, let's say you have a problem where you always sell too early because you're afraid of losing your profits. And the only way to overcome that is to purposefully lose your profits many times until you are numb to it. And I'm not even kidding. Like it's really like what you have to do. Like you have to put yourself through this. And like I said before, like you know, I just kept banging my head on the wall till it's stuck. And eventually you will become numb to it. If you just stick with it and you stay consistent and you continuously fuck up, you will eventually become numb to it. And like, you know, I'd love to say that there's people who can skip these steps, and there are, you know, there's like a few people in our Discord, especially who I've been very impressed with. They were able to, you know, skip a lot of these steps that I went through. Um, but most people can't, and it's just about exposing yourself to it and eventually, you know, overcoming it that way. And eventually you will become numb to it. Like I said, time heals everything. It really does.
Yeah, I think like seeing people that are able to skip steps, that kind of applies to anything where, you know, if you have a mentor, if you're able to hear from someone that maybe has gone through something before and they can say, "Hey, this is what was hard. This is what was really hard for me when I was in that stage. This is how I got around it." Or maybe just telling them like this is what was difficult. They know that going into it, and it might make it easier for them to come out of that. And that could easily, you know, be the case in for whoever it is you're referring to. But I'm also curious. So I guess um, for someone like you who does this full time, and then like for someone who's trying to do it as a side hustle, do you think that's feasible? You know, like stock picking alone, like that takes a lot of time, and you have to really set aside and have a lot of time to be able to pick stocks and monitor stocks and like dig through statements, and then trading stocks, trading equities. That takes a lot of time in itself as well, like monitoring charts, monitoring positions. Do you think it's even possible to do that as almost like a side hustle? Or do you think you almost have to go full time in something like that?
I mean, it's like, I think that, you know, maybe there's some really talented people out there, but it's definitely not me, and definitely not really anyone that I've run into. I think at least you need to do it full time for a little bit to, you know, get into a groove, find a system that works for you and make all the mistakes that you need to, or maybe you take some shortcuts and you skip some steps, but it's hard to say, you know, like some people might get lucky enough to where they don't have, you know, they don't have to do a lot of things that I had to do. But for the most part, I'd say, yeah, you probably do have to do this full time, at least for a while, until like, you get to a point where like, let's say you only trade SPY and you have one specific setup you look for each day, and you are, like a lot of people, some people only trade for the first hour of the day, like then in that case, for sure, you could do it part-time, but getting to that point where you can actually do that to where, like this is a profitable, like I have alpha in the first hour of the day, no matter what. And like this works out, takes a while. And like that probably took going full time. So yeah, that's what I'd say. Like at least for a little bit, you need to go full time until you really, really get the hang of it. And then you can slowly start weaning yourself off to like, taking the back seat and like just waiting for everything to come to you. Because that's something you'll come to learn is a lot of trading is just waiting for the right setup. Because a lot of the amount of time that you put into analysis offers diminishing returns is something that I've learned, like the more like you can only analyze something so much and only get such a high probability on a play before you're just fucking with yourself, like so yeah.
Yeah, that's quite insightful. I think you could apply that to a lot of things in life. I know you mentioned just analysis, and I think technical analysis, from what I've seen on your Twitter and the website, you stress it a lot, and you kind of base a lot of your trading off of it. So two things. Could you just explain like what technical analysis is for anyone that doesn't know? Really brief description, and then what would you like advise someone like getting into technical analysis? Do you think it's better for people to like paper trade? Do you think it's better to watch YouTube videos? Do you think it's better to join your course? Like what would you advise to someone that's trying to get into technical analysis and to be successful using it?
Yeah, so like I would say so first of all, everything that I know is based on personal experience. Like I didn't learn from anyone. I taught myself everything, except for like some old books that I read, from like they were pretty old, like, like this one book's from like the 1920s that really taught me a lot. But um, I would say if you're gonna take that route, first of all, I recommend taking that route, and it sucks, and that's why I had to do a lot of things I did. But first of all, don't listen to people online because they're fucking stupid. 90% of them are idiots, and like let me put it this way, like I have never run into anybody on Twitter that I think is actually making money. Like I'm not kidding you. Like I can look at people and, like with as much experience as I have, and I can be like, okay, this guy's bullshitting. Like he's 100% bullshitting because like I know what he's doing doesn't work because I've done it before, like I've tried to do it before, like these people who are using all these bullshit indicators and whatnot. But anywho, I'd say stay away from the internet, first of all. And second of all, nothing can really replace hours spent staring at a chart. Really, like I said, a lot of it is from personal experience. My whole system, I put together myself. And I probably spent over 10,000 hours in Thinkorswim in the past 6 years. I'm not even kidding about that. I have this open 8 hours a day, every single day, sometimes longer. And nothing can really replace that. And you'll come to recognize a lot of patterns. Humans are really good at recognizing patterns. And sorry, I forgot to explain what technical analysis is. Technical analysis is literally anything that is not fundamental analysis. And a lot of people misunderstand that. A lot of people think like, oh, like, if I'm looking at like options volume and like market dynamics, like, yeah, I'm using like fundamentals. Like, no, you're not. You're using technicals too. It's just a different kind of technicals. It's literally anything that's not fundamentals. And really, all we have to work with in technical analysis, in its base form is price and volume. So technical analysis is a school of thought that's based on price and volume, whether it's stock volume, options volume, future volume, and all the prices that go along with that. And I would say, yeah, teach yourself, read books. Don't buy any courses. Don't go on YouTube. Sure, join my Discord, like I can help you. But at the end of the day, at least, especially getting started, I'm going to give you this book called Technical Analysis of the Financial Markets by John J. Murphy. It's so funny, dude, because I've probably made this guy so many book sales by recommending it to literally everybody. But it's a really great book, and it'll teach you the outline of technicals and like how to understand everything that I'm saying, how to understand what everyone on the internet is talking about, even the ones that are bullshitting. and it provides you a base, and that's all you really need. After that, like I said, humans are good at recognizing patterns. So from there, you start staring at charts, you start making connections. You go like, oh, like this isn't a bull flag, like that's in a bear flag, like that's great. Like, oh, there's resistance here, support here, like, shit like that. And from there, hopefully you'll start crafting your own trading system. Or from there, once you get to that point, then I'd say, join my Discord and I can help you apply that better. And you can watch me to see how I apply technical analysis to my trading. And like, so here's the thing that like technical analysis gets a really bad rap, and why? It's because of what I said. Most of the people online don't know how to do it. They're all bullshitting. But fundamental analysis is not much better. And that's another thing people really misunderstand is fundamental analysis is very subjective. It's very biased. Valuations are kind of made up. Like, who says this stock can only be at a 20 PE and the stock can only be at a 40 PE? And the last 2 years there were stocks trading at 500 Ps for a while, and in the last like maybe like 10 years before that, stocks were trading really low, and in COVID, stocks were trading way under their valuations. So valuations are more of like it's subjective, like if you look at like a discounted cash flow analysis, you're making a bunch of assumptions. You're not, like, yeah, you're basing it off of data mostly, but you are, you're drawing conclusions that aren't, you're not actually working out some mathematical formula that is hard coded, you're making assumptions at the end of it. It's the same thing you're doing in technical analysis. They're really not all that different, although people think they are. You're using the data that you have to increase the probability of whatever trade you're trying to make as much as you possibly can, to the point where the risk reward is worth it. But yeah, that's all I have to say about that. Sorry, that was a mouthful.
Yeah, I think like there's a lot of different ways people use technical analysis, and while maybe a lot of them are, they don't know what they're doing, like you said, but like obviously there are plenty of cases where like it does work. So maybe for someone who's like experimenting, finding their own strategy, maybe, how would you like recommend? How do you like find out if your strategy works? How do you like test a strategy and ensure like, okay, this will work 9 times out of 10, and not just, okay, this worked a couple times and it was just purely off of coincidence, and now I'm going to lose money if I try and use it? Like, how do you go about implementing and like ensuring that a strategy works?
Yeah, so like I forgot to mention this, but a lot of the time when I first started trading, I actually went down the algo trader route, and I taught myself Python, I taught myself C++, and I taught myself ThinkScript, and I tried to sort of solve the market. And I think a lot of people go through that, where you don't want things to be discretionary. You don't want to have to make the decisions. You want a bot to do it for you. You want to figure things out, and that taught me a lot about what you're saying. And the only way, and something that I've learned from doing that, is that backtesting can only get you so far, backtesting a strategy, because it's very easy to bias yourself in backtest. It's very easy to find something that only works in certain market conditions, and then the next one, it doesn't work anymore. And that's something really tricky. So the only way to really know whether something works, I think I see there's 2 ways. Either you need to backtest over a very large data set. I'm talking 10, 15, 20 years of profitability, maybe 5, but at least 5+ years of profitability and many market conditions. Then you really do have some alpha on the market. But otherwise, you have to forward test it. There's no way around that. And the stuff that I do now, I can't backtest it. It's discretionary trading. And I think a lot of people come to that conclusion, where algorithms, unless you have billions of dollars of infrastructure and you're sniping bids, you're sniping ass, you are making markets, it's very hard to take that route to where you have a strategy that is actually possible to backtest. A lot of times you're kind of making decisions, what we call discretionary trading, which is like, I'm making trades, a little bit of what the trades I'm making is my vibe. Like, and that sounds stupid, but it's like, it just comes from experience, my ability to discern. I'm looking subconsciously, I'm taking account for so many different things that it would be very hard to put into words, and it'd also be almost impossible to backtest. So that's why I say in many cases, you just have to try um, and stick with it. And also, I really haven't found a strategy that works in every market. That's, and maybe some people are not like this, and I am sure there are people out there who have strategies that somehow magically work in every market, but I've learned that you need to apply different strategies to different market conditions. So
Yeah.
I'd say, just be fucking flexible, and forward test your strategies. Don't trust your back tests unless you've got 5+ years of data.
Yeah, I think what you said about like finding your vibe with like 5+ years of data, like speaks to what you were saying about like literally just putting in the time, like how you've been through 10,000 hours of watching charts at least, and you kind of have a feeling on what works for you. And I feel like if you apply that to really anything, including trading, it's like once you do something over enough, you can really realize like, okay, I have a feel and I have like a kind of sixth sense because I've exposed myself to this trading or this practice for so long, and you kind of understand things. And then also I wanted to ask you about, you kind of mentioned like how you do switch. You haven't found a trading strategy that works in different market conditions. So how much do you like kind of incorporate the current market conditions? Obviously, everything's changing right now. These past 2 years have been tightening. So how do you kind of rotate into like a bear market, quote unquote, when you're trading and still make it profitable?
Hmm.
Or is there a recipe for that?
In a bear market, so I I would say in a bull market, so like this is gonna sound stupid, but I mean in a bear market, stocks are generally going down. And like, and also I'd say we air so okay. So there's two different types of trading systems, right? Well, technically there's three, but I feel like you can classify most things into two different schools of thought, which are momentum and mean reversion. Momentum is like you're betting a stock continues in one direction and then keeps going on in that direction, right? And mean reversion, you're betting a stock will like reverse, like it'll run into resistance and then reject, rather than you're betting that it breaks that resistance and then breaks higher. So, and in bear markets, I've noticed, or so here's the thing. When the market's moving in one direction, momentum trading is going to work the best. When the market's chopping, mean reversion trading is going to work the best. And the market is usually chopping, which is why a lot of people employ mean reversion strategies. About I'd say, or I think there's definitely a statistic on this, but I think it's at least 70% of days the market is chopping, or it's an inside day, it's balancing, which means that the market is trading inside the previous range that it was trading. So most of the time, these mean reversion strategies are going to work. And whether it's a bull market or a bear market, like sure, yeah, in a bear market, you're going to have a better time if you're betting stocks are going down. Like that much is obvious, that much is simple. But I'm just saying, like, in terms of market conditions, I'm more talking about like, is the market moving in one direction or is the market just chopping sideways for a while? Like, you can look at the last like 7 months, the market has just chopped sideways. And like, but look at 2020 to 2022, momentum trading would fucking crushed it, and it did crush it. So I would look at it like that.
Yeah, I think there's another statistic that kind of relates to that where I think I don't remember the number off the top of my head, but it's something like 70% of moves in the stock market happen overnight when the market's actually closed, which is why things like people trying to trade intraday is so difficult because a lot of times the move isn't that meaningful, especially like over the long term. But I'm curious, maybe, and this could be in terms of like investing or trading. What are some risk management strategies that you've picked up and employed over your career that you've found to be especially useful? And I know you mentioned the one about like having a half and half between your two portfolios, but maybe like more specific. Like I know you have a 2% sizing rule, things like that that have worked out for you that you think other people could use as well.
First of all, yeah, like you said, the 2% rule, that's like the single most important thing that I would ingrain into everybody. And I think everybody in your Discord has kind of gotten a good grasp of that by now. But the point is, no matter, even if it's not 2%, you need to base how much you're risking based on a percentage of your portfolio, because in that way, if you're winning, you're going to be risking a little more, and if you're losing, you're going to be risking a little less. And if you are truly risking 2% on every trade, then it's going to take you hundreds of trades to zero out your portfolio in a row lost. So because you're constantly sizing down, every time you lose. And in the same way, like people always say to add to your winners and take away from your losers, if you're winning, you're going to keep sizing up, which is only going to work to your benefit if whatever you're doing is working well. So that's why I'd say no matter what, I try to say 2% because I think that gives me the most leeway. That's what I'm comfortable with. It really is about what you're comfortable with at the end of the day. These are kind of arbitrary numbers, but I'd recommend 2% to a beginner. Some people might fucking do 5%, 10%. I know people who do 5%. 10% is definitely fucking pushing it. But there's like like even like 1% or 0.5% sometimes. It's really whatever you're comfortable with, as long as you're basing it on a percent. Other strategies I'd say is just don't ever, settle for an entry. You always want to get the best possible entry on anything that you're trading. I think a lot of people will, and this isn't just a risk management thing, FOMOing, into trades instead of waiting for your entry. Having a plan is probably the second most important part of managing risk, is just, knowing where you're going to enter, knowing where you're going to exit, and sticking to that no matter what. Like, don't let your emotions get in the way and you enter too early or too late, or whatnot, and respecting your stop loss, like respecting that 2% can be hard sometimes. There's times where like that stock goes against you 1 to 2%. You're like, yeah, I could give it a little more, maybe if I just wait like one more day, it'll go back up, everything's gonna be good. And then it keeps going down and you're like, shit, well, I kind of don't want to sell. People kind of get married to their positions, we say, they marry stocks, and you never want to do that. Yeah.
Yeah, those are awesome, man. I think I, we could just sit here and start shilling your course about doing this. So I appreciate you sharing all those insights very, very simply. I'm curious, we don't have to sit here and like kind of boast your course or your Discord, but I do kind of want to get into like the story of how you kind of like came up with this idea and like what kind of motivated you to start a course in the first place. Because I think it really is a beautiful thing. And a lot of people get these bad reps about like, okay, you're this guru. But I've only heard good things about you and the Discord and kind of the way you guys do it. And you kind of have the intention of teaching the people that actually join the course instead of just sending out trades to them and they blindly buy and sell, which I think is really a beautiful thing. So just backtracking, what was like, obviously you've talked a lot of shit about like people online. So what was kind of like your motivation for starting this course and I guess turning your Discord into a premium server instead of just a free server?
It's so like, I don't want to get off topic, but let me just say this. You know, we or in general, like just someone telling you to buy or sell doesn't really do much for you. And like that sounds weird, but it's like here's the thing, and here's the reality of it. If you don't have the same exact size portfolio as them, if you don't have the same exact risk as them, if you don't enter at the same exact second of them at the same exact price as them, and then exit at the same price, same risk, same everything, you are not going to get the same results. Like that's just a fact. Buying and selling alerts are bullshit. They're scams. Because you can't unless you have all that information, because at the end of the day, signals are just one part of a working model. That's what we call alpha, a model composed of, there's all different models that go into, like a big, a whole trading system. There's an alpha model, which is, like I said, signals. There's a risk management model, a portfolio construction model, etc. But the point is, signals don't really do you anything. And that's why we started this, because we looked around and we were like, man, like these people are all scammers. No, like seriously, like everybody is scamming everybody. And I've come to realize that's a lot of the financial industry. Like hedge funds, a lot of them don't actually make money. They just pocket that 2% passive fee and they're millionaires off of it. And a lot of them don't actually know how to trade. A lot of people run hedge funds. It's mostly daddy's money and connections. It's very, very disillusioning to me, and kind of just nuts that was the case. And that's why we were like, okay, if we actually did this and we actually know what we're doing, or I'd like to think I know what I'm doing, we could probably blow everyone else out of the water. And I came to, and that was the gist of it. That was the idea, was it would be easy for us because we are not scamming and everyone else is scamming. Little did I know, people love to be scammed. And I'm not kidding. Like people would much rather, like, first of all, nobody wants to learn how to trade stocks. People just want to make money. People just want to be fed a signal to buy or sell and then magically have money get deposited into their account. Like I said, that doesn't actually work, but I think the culture has convinced people that does in general. And yeah, so we didn't do that, and that hurt us a lot in terms of sales. It's much easier to get people to join your Discord when you're like, yeah, like join us, we'll give you a buy alert and you'll make 10,000% a day. Look at me, I'm making millions of dollars by just fucking doing whatever the hell. And most of the time they're paper trading and most of the time they're bullshitting, but you know, you get what I'm saying. Like it, I figured it'd be easy, and like I said, it wasn't. And we're very like, yeah, we've come a long way. I think we're in a good place. Most of our members, we retain them for like years. We have people who've been with us for 2 years, maybe over 2 years. A lot of people, but it's very hard for us to gain new subscribers because of the way we do it. And it was very crazy to me when I figured that out. Was you kind of have to be a scammer to make it in this industry. You have to preach to people that they're going to make all this money, and they're not going to have to put in any work and whatever to sell it to them. And I also realized that I'm not a salesman. I never will be. I hate sales, to be honest with you. That's probably why the Discord isn't as big as it nearly could be. But I like to think that as long as we keep doing what we're doing, at the end of the day, eventually like real will recognize real, and we'll get the recognition that I think that we deserve. But who knows? I'm just gonna keep doing what I'm doing, put my head down and do what I can. But yeah.
Yeah, I'm curious. I guess sort of unrelated to Ticker Wizards. Maybe like since you've been in your entire time trading, what were some of like the, I don't know, maybe just like a crazy story or just some of the biggest winners or losers that you remember that like really stick with you that you think are worth mentioning?
Like that I've done or like that I've witnessed?
I mean, either one, I guess, but I meant like that you've done.
Oh, okay. So like that I've done, I would say that what happened in COVID, I would say COVID, but I think a lot of people had the same experience. That or they made a bunch of money on GameStop. But I'd say the COVID crash was that was probably the biggest one for me, like biggest single win and biggest single loss. Um, it was so funny because I was I was really into trading at that point. I've 4 years and I was making money consistently, but I broke my rules that time very badly because I had been on fucking Wall Street bets, man. And Wall Street bets, like, this is horrible, but they were literally spreading COVID so their puts would print. Like, I'm not kidding you. People were like, I'm sick. I'm going to go out into my neighborhood and spread this so that our puts will print. And at that point, I was like, there's no fucking way that this shit doesn't spread a ridiculous amount and the market doesn't crash. And I literally took my life savings and put it all into fucking puts on Brazil. Fucking EWZ, because I was like, all right, if America's fucked, then Brazil's really fucked because Brazil is, like they don't have as good infrastructure as us. EWZ is pretty liquid, like people, it's very crowded down there, and that worked. And I made like, God, I don't even fucking know. I think like $50,000 or something. And then I lost like maybe like $40,000. And yeah, that fucking hurt. But but yeah, that was definitely the craziest story that I've been through. And then I'm sure like that guy Mark. I don't know if you've heard of it. I'm sure you have. Yeah, you've been here. That's the craziest single thing I've ever heard. And if anybody who's listening to this does not know, this man, he he goes by Mark on Discord, and this dude, I think he literally made, what was it? Was it $50 million on GameStop, or was it like 500 million?
Yeah, he was up to like 190 million.
It was $190 million, and like this was all real. Like I know what fake looks like, but this was fucking real, and he documented it like every bit. And it was also like a loan. Like he took out money from like a loan shark to do this in the first place, and he literally made like $190 million. We were like, dude, like go retire, buy a house in Beverly Hills, don't fucking worry about anything else. And of course, this guy started losing. He kept doubling down, and you always want more. And then, like I said before, once you see the view at the top, you don't forget what it looks like. So once he was down to 100 million, I think that was it. He wanted to get back to that 200, and he kept going and going. This man lost everything, every fucking, as far as I know, I'm pretty sure he lost every dollar. Maybe he kept a million or 2 million to himself, but I want to say that I'm pretty sure he lost every cent of it. That is the craziest shit I've ever seen in my life. Like, I can't imagine how he feels. And that's it sounds bad, but always makes me feel better. If I'm ever feeling bad about a loss, I'm like, at least I did not do that. It could be worse.
Yeah, I feel like there's always someone that's losing more money than you, or there's someone that's making more money than you. So it's hard to like, it's easy to get distracted by other people's stories. I'm curious. This kind of just popped up in my head. What if you had to guess, like, what percentage of your profits, or your revenue, whatever you want to call it, do you think are from like these 10 baggers, these crazy trades, and what percentage of them do you think are just from consistent small trades that add up over time?
Oh geez, I mean,
Or if that's a dead end, that's fine. I was
no,
just
I'm just
curious,
saying,
like if
like I haven't hit like a 10 bagger in like, I don't know, since 2020. And that was the first one I hit in a while. Like once I really started to know what I was doing, I stopped hitting trades that were like 5 and 10 baggers, to be honest with you. For the most part, you shouldn't be hitting those trades, because that means that I don't know, you probably risk a little too much, or maybe the trade you're taking was a little. So like, let me say this, like options pricing is not that, they're priced pretty efficiently. More so than you would think. So that's why when you're making money on options, it's because you are betting that the price that they are selling it for is not what it's actually worth. But a lot of times it is. And that's why it's very hard to hit trades like that. And most of the time that you're hitting trades like that, you're getting lucky, or you're risking way too much, or you're just, you're doing something you shouldn't be. So that's why once you become experienced, you kind of stop. And that's why the only trade like that I hit was probably 2020, in the past, like maybe 5 years.
yeah, I appreciate you touching on that. I think I really wanted to like bring up this whole idea of like consistency, and a lot of people like whether it's trading or just gambling or business, there's this idea where like, okay, you can get rich like overnight, like this common misconception that, okay, I can just hit a few 10 baggers and that's going to be the best likelihood that I'm going to reach $190 million. Like, I think a lot of people kind of get ahead of themselves, and they don't realize that it's really a long game if you want to be successful, whether it be trading or in life. And I think the practice of consistency and just doing things over and over again that work, I think is really just a valuable lesson that I think you probably apply to your trading strategy, it seems like.
100%. 100%, dude. I mean, that's a big realization that people have to make if they want to actually do this. It's also kind of why I started this chat, or one of the reasons I started this chat room, is because, some people have like 1,000 subscribers paying in like $100, and like you can do the math on that. Like, how long will it take me to make that much trading? A while. I'm pretty young. I've only been doing this for 6 years. I'm not a millionaire. Never claimed to be a millionaire, but I definitely do really well for someone my age. But it's still, being good at trading means making money relatively slowly for the most part. And unless I have some supplementary income that I can put into my portfolio, like having a ton of subscribers, or like I said, I've been trying to get into the private equity business. It really takes money to make money. So yeah.
Yeah, I think one thing a lot of people kind of forget is the market averages what, like 10% on average per year. If you're beating 10% trading, like you're doing really well. You don't have to have a 1,000% year. Like that's not normal. So yeah, exactly like you said, just those small wins and like slow grinding up is like just that's all you need. I'm kind of curious while we have you here. Like I will say, for the audience, it's January 23rd, 2023 while we're recording this. Do you have like any market predictions or like any outlook on the market right now that you kind of want to leave with the audience, or anything that you think is worth mentioning or that you think is going to happen?
Oh man. I mean, I don't like to make predictions, man. Like, you've been with me long enough it's not me, like I always play what comes, and I always let the market tell me what it wants to do. So, I'd just say, watch my most recent YouTube video for a peek of like what I'm looking at. And like, it's not going to make, so if I give an answer to that question, it's actually not going to make sense to the audience unless they know a lot about how I do technical analysis. But there's a certain trend line that I'm looking at for us to break. And the gist of it is if we break that trend line, then I'm expecting us to break back into a bull market. And if we don't, then we'll probably make new lows. So that's why I always look at things, you know, in terms of probabilities. I try not to make predictions. A lot of people you see who make predictions online, they're just doing it for like Twitter followers and for controversy and stuff like that.
Yeah, I also had one other question. I've always kind of admired like your charts, and I'm not like a huge technical analysis guy, but I do pay attention to your charts. I'm curious, maybe what's your thoughts on the crypto space right now? Doesn't have to be chart related; it could just be like overall, because we do cover crypto sometimes on this podcast. So I'm really curious, like what you think about it.
Yeah, so like in terms of, I'll talk about like in both perspectives. Like first of all, in terms of technical analysis, I'm sure you've seen my updates recently. There was like a trend line I was looking at for as a reversal, and like things look pretty good right now. You know, you want to watch that Bitcoin 22,000 level. If you fall under there, things get pretty ugly again. Probably move back to like 18,000. But while we're above, good chance at 28,000. And honestly, it's very possible that Bitcoin bottom. Like this type of move that we're seeing right now is pretty, you know, characteristic of a bottom. I think unless there is some sort of another, you know, shocking crisis in the space, it's going to be hard to get Bitcoin back down. But um, in terms of fundamentals, I don't know, like I hate to say this, and you know, this has missed me out on a lot of money, but I've never really believed in crypto. Like, you know, I've never been comfortable investing in it. I don't know, I've always just thought that the government would not let it succeed. I always think about it like this, like, so the reason that the dollar is what the dollar is because of liquidity, right? Um, you know, people can get tons of dollars and get rid of tons of dollars without really moving the value of the dollar much, if at all, tons, right? And that's what's most important for a currency. And then you have Bitcoin, where this thing moves 10% a day. How could that possibly be a currency? Maybe one day when it stabilizes, when it has a you know, a $10 trillion, $20 trillion market cap, sure, it could maybe eventually be like that the world somehow united to all use Bitcoin and like, you know, but then it becomes like this, like what happens when one country has the most of it? What happens when, and this is the case right now, China owns most of Bitcoin. And like, I don't want to sound like a conspiracy theorist, but what, how could we ever accept that as our currency if China owns most of it? We're not going to, we never will. And I just don't believe that that we're going to let that succeed without, you know, creating a competitor if you know, that remains the case. Because let's say we did, let's say the whole world, you know, they took on Bitcoin as a currency, and then there was one country that amassed most of it, and that country decided they wanted to fuck everyone else's economies. They could just sell the living crap out of it, and boom, you know, the value of the currency everyone's using is fucked. And that's the problem with a decentralized currency like that. It can be manipulated very easily by people with enough money. And you know, it's not just because it's decentralized, because of liquidity. Like I said, it's not liquid enough to where it can't be manipulated by any single party. So if it gets to that point, then sure, it will be useful. But, and then it does have some uses, don't get me wrong. There's a lot of stuff that you can only do with blockchain. And I think the technology around blockchain is great. I just don't know if I believe in like Bitcoin as like this, you know, this currency that's gonna like save the world and whatnot.
Yeah, I think that was a great take on it because we don't really talk about like the bear case really for blockchain at all on this podcast. So I'm going to leave it at that and not really say anything in response to that. Or play any devil's advocate. But we do. This is kind of a show, and it's more like we center it around finance a lot too, but we also center it around like self-improvement and entrepreneurship and just being a better person. So we'll kind of take a dive in this for our final question that we ask every guest. Is what is one goal that you have? It could be like something in your career life, like for trading, or it could be something like personal that you have. And what are some steps that you're doing to achieve this goal?
So like, and like this is gonna sound super generic and like maybe even like lame or corny, but like I want $1 billion. I'm not kidding. No, like this is like serious. Like I'm going to make $1 billion. I'm gonna take care of my family. I'm gonna take care of all the generations that follow me. Um, and I'm going to take care of, my girlfriend's family, whoever needs to be taken care of, my friends. I don't care. I'm going to make enough money to do it all. And that's really my goal, is that 1 billion number. And I'm sure if I get there, I'll probably make more than that. I'll probably have investments that continue generating wealth, but that's kind of my goal. And I want to do it hopefully before 30. And that's very fucking hard. And like I said, I'm not even a millionaire yet, man. So that's tall tale, but I don't think that anyone's ever done anything extraordinary without that confidence and without really believing that they're doing it. And like, without, really just going for it and giving it their all. And that's why you asked about steps. Like, that's why I spend 8 to 10 hours a day staring at charts. That's why I run this Discord. I trade full time, and I'm also working in private equity now. Like, I'm literally on go 24/7. I don't stop, like, until I get there. And that, that's how I look at life. And like, and that's really what I always remind myself. No, nothing ever did anything extraordinary without that mindset.
Yeah, I really appreciate your time. Just thanks again for that. We are gonna link all of your Twitter, your website, and any other resources that you mentioned. So do you want to leave anything else with the audience, aside from your Twitter and website, or just any message that you have for anyone out there?
Yeah, so like, I have a list of really good books. I'm sure you've seen in Discord, the books channel.
Yes,
I don't know if
please.
you guys can somehow link that, but I mean, I'll say the books out loud in case anyone's just listening and they're not looking at links. But first one's One Up on Wall Street, Reminiscences of a Stock Operator. Oh, for One Up on Wall Street's by Peter Lynch. Reminiscences of a Stock Operator is by Edwin Lefebvre. It's about trading psychology. Margin of Safety is by Seth Klarman. It's about value investing. Technical Analysis of the Financial Markets is by John J. Murphy. It's the technical analysis holy grail, basically. Inside the Black Box is by Rishi K. Nare, and it's about algorithmic and quantitative trading, and that's what gave me a base for the quantitative trading that I was getting into. And then Trading in the Zone is also trading psychology. I think psychology, yeah, I'd say, and that would also be my message to anyone listening to this, is psychology is most of it. Alpha, getting like the signals to buy or sell is a pretty small part of it. It's probably mostly like 75% execution and psychology. So make sure you're reading those books. Don't listen to idiots online, and yeah, nothing beats hard work, especially in trading.
Well, awesome, dude. Thanks again for coming on. I've been a big fan of what you guys have been doing for a while now, so it's great to have you on the podcast and talk to you. For the audience, you're at Ticker Wizards on Twitter. So yeah, feel free to shoot him a message if you have any questions. But yeah, thanks again for coming on, TJ.
Yeah, cool. Thank you guys for your time.